Hello and welcome to the first video for 2016. This is Isaac from Trade Simple Trade Smart, and I wish you all a happy, joyous and prosperous year ahead. What I want to do in this video is do an overview of what happened last year, any dominant themes that we need to take on board from 2015 into 2016, what the market's currently doing, the dominant themes in play this year to look out for, and how to position ourselves for the coming year ahead. So without further ado, the first thing I'd like to say is this: every year has a dominant theme that plays through the markets. Last year, the whole theme was about recovery. Have we got a definite recovery, or is the financial recovery under question? That was a dominant theme. What came out of that is that the US economy has recovered strongly and is officially out of recession, and therefore that resulted in the dollar being pretty strong, stock markets rallying. Overall, when we look at the markets, there's been a lot of sideways movement for the most part of last year, certainly for the second half of last year. That could continue this year. What I'm going to be focusing on is the dollar index and a few currency pairs to look at, the majors: pound dollar, euro dollar, dollar yen and dollar CAD. The key thing here that I believe we need to focus on is the US dollar. What happened in December 2015 is that the Fed raised rates for the first time since the financial crisis. Now, it raised it by a quarter of a basis points, but that could signal the go ahead for other central banks to follow suit later this year. So I'll speak a bit more about that. But first of all, I've got here a chart of the dollar index, and this has been critical for being able to profit from Forex, certainly for the second half of 2015. So for the first quarter of 2016, we want to continue to focus on what the dollar is doing. There's no better way of doing that above and beyond the dollar index. Now, what the dollar index is effectively is a true measure of the value of the US dollar. It's an index by looking at the euro versus the dollar, the pound versus the dollar versus Japanese yen. So it looks at the strength of the dollar against all currency pairs, or the major currency pairs, and then does an index on, or an average weighted index of how strong it is. So that's what it is. What it tells us in a nutshell is whether the dollar is strong or weak. And what we've got here is a weekly chart. Now, from the weekly chart, we can see a couple of interesting things. Firstly, there's been this massive rally. This is what happened over last year. We could see it just literally has shot up in one direction, and that's lasted for some time. I mean, this is beyond just a year. It's lasted more than that. However, what we see is that we've had this sideways movement which took place for the majority of 2015, certainly for half of it. The key thing is here. What we see is that we've got two major points of interest. The first is where it is in relative to the recent highs, which could present possible resistance levels, and the bottom is the level, support levels here. Now we're trading in between these two levels, so we're in a range at this moment in time. Bear in mind, this is the the weekly chart, excuse me, where each bar is 1 week's worth of data. So this is more, we look at this time frame to understand the overall market structure of what we do. A lot of what we teach here in Trade Simple Trade Smart focuses around using multiple time frames to build a solid picture of what's happening, and the best way to do that is start with the highest time frame possible, which you could start with a monthly. I'm just looking at the weekly here, and we can see we've had this massive rally, and now we've been in this sideways movement here. So the key thing is, if we break above these highs here, that's going to represent fresh surge forward or higher. So we've got a psychological figure here of $100, and we've struggled twice to break that level. If we break above that, i.e. we go past it and we stay above it, then the next major level will be around $120. So we've got clear space for a number of weeks, possible months ahead. The thing to note is that although we've got the $100 level here and it struggled below it, the opposite could happen. It could go all the way down to these lower $93, $94 levels. So if it fails, the first thing to look for is if it fails around the $100. Now let me bring on a daily chart so I can look at that in a bit more detail. And this is what we're saying here. The box that I've got highlighted here that we can see, that represents the resistance that we're coming across. If we take out that resistance level, which is $100, and stay above it means we close above and we continue to rally above it, then we're looking for continued dollar strength. If we fail, i.e. we see an attempt to go above this level but price gets rejected and it's pushed down, then we could look for price to move back down towards a lower level here, and therefore that could represent dollar weakness. So that's going to be the scenario. We'll know over the next week or two, because we've got two important things happening this week. We've got FOMC meeting this evening as I do this recording, and we've got non-farm payrolls this coming Friday. So by Monday we should know where we stand. Hopefully those two events will be enough to push the dollar in one direction or another, either above this clearly or a false break there, looking for the short below. The distance from where we are to these lower levels is quite wide, so I don't expect anything. I mean, if we wait, if you know, we're going to wait all the way until price reaches here for a trade, we're really going to count the first 4, 5, 6 months potentially out of doing anything. So what we're looking for in instance really, as I keep reiterating, is a move above this $100 level, or failure to stay above the $100 level to give us a sign of dollar strength or dollar weakness. Now let me bring up another chart of the dollar that puts into context all of this. And this is it. This is the dollar index over the longer term time frame. So this is from 1967 until 2015, representing the major peaks and troughs, the major moves, and what was happening in the economy, or the global economy at that time. We can see that the spikes here, the highest that the dollar index has ever got to has been around just over $160, around $160, $164. And that was during the Latin American debt crisis, which was around 1985. Since then we've had numerous lows and highs. So if we just focus on the lows and highs, here was a high, here was a low. That was a stock market crash of 1987, pretty painful. We had here the Asian financial crisis, which I remember quite clearly. It was at the turn of 2000. Also that was followed on by the dot-com bubble here, just around 2000. That caused a decline in the dollar, and this is what's happened most recently. This is 2007 onwards, the financial crisis, where the dollar hit the lowest level it has ever reached. All right, and that was in around $74, around that level. Now, where we are is really no man's land at this moment in time. If we remember the previous chart, we were looking at this here represents the consolidation, or where we are in terms of range band movement that we're seeing. Now you can see here, this is $100 psychological level. If we break above this level, where's the next possible place it can go to? Is this here, $120. So we've got $20 worth of movement on the dollar index, which is significant. It's quite a big chunk, as you can see here, of this move, but there's nothing to test it in between. So if we convincingly push above this level, then $120 should be the next logical target. If we fail at that level, then we could spiral down into the lower levels, you know, back to say $80 or so, in which case we'll be looking for dollar weakness. So that's what we're looking for. The first thing will be to look for dollar strength, i.e. a break above. If it fails, then we look for dollar weakness. Now, how do we translate this into the major currency pairs? How do we put this into a trading plan? Well, let's look at a few currency pairs to see how we tie all of this together. One thing to note is, if we go back to the chart of the dollar index, we are currently around sort of the $99 mark, so we're close to the $100 region, which we can see here. So that's the key thing to look for. Make sure that you keep an eye out on the dollar index over the coming weeks. Now, as applied to the currency pairs, let's look at euro dollar firstly. Here's a chart of euro dollar. We can see that, looking at this is the weekly time frame first and foremost, and we can see we've been in a downtrend for a significant portion from 2014 to 2015. This correlates with that massive rise we saw in the dollar index, which lasted, it's been mainly for about 2 years or so. Now, what we see from this is that not only have we had a decline, but for the majority of 2014 we've had this sideways movement. Look where we are at this moment in time. If I maximize it, we can see we've got a level of support at the bottom here, and that's where we're approaching. You know, we're quite close to it, so this could be the decision making point. At the same time that the US dollar index hits the $100 mark, which was the resistance, euro dollar should be testing this lower level, which is support. So what we're going to be looking for in euro dollar is a break below this in continuation of this downward trend, or a failure above this, below this, for possible reversal long. Let me switch to a monthly chart, just so we can see where we are in context, and we can see that we are definitely in a downtrend. So my preference would be to look for the short. If I minimize this, we could see here, if we do break this level of support, I mean the next level to test is around down here, around 95.28, at least parity, which is 1-to-1 with the dollar. So if we take out this low, price is most likely going to head to 1-to-1 with the dollar. That doesn't look like it's a million miles away by just looking at this chart technically. Right, we are in a very strong downtrend, so it's going to take a significant amount of money to reverse this trend and start heading up again. In the meanwhile, if we look at the weekly, we can see this consolidation has taken place for quite a while, and this is just, it moved sideways, and we had a spike up here which represents a stop run of these highs, and since then sellers have been in control, pushing price down. We've had this pullback. It looks like we're heading back down again. So the key thing to look for here is this price point, which is around 104, call it 105, let's round it up. Want to see what happens around the 105 level on euro dollar, and looking for price to go below that for continued shorts. If we look at the daily chart, again we're using dual time frame or multiple time frame analysis. We're looking at the weekly for context. We look at the daily, looking for a bit more detail and to fine-tune our entries, because there's no point trying to trade off the weekly chart. You'll need 400 or 500 pip stops. That's pretty wide. It's better to trade on the lower time frame, going with a tighter stop loss in order to get a very good reward to risk trade. So looking at the daily here, we can see this is the support at the bottom. This is the strong support that we're seeing. That could be a potential market turning point. What we see also is we've had this support level here previously that's broken, and if I zoom into that a bit more, that's the support level there, that's broken, and we could get a retest to that level for possible short. But if we continue down, this would be the next place where we'd be looking for a long, if a long was to materialize. Based on the structure of this chart, I'd expect price to head down here. So what we could do is, if price pulls back up, we can see we've also got this trend line in place here. So the key thing to look for would be this: as long as price remains below this trend line, then we're good for shorts. If it breaks above this, if anything happens and there's a market reversal, then you'd want, between this trend line and this level is really no man's land, because anything can happen at that stage. So I'd be bullish, looking for long once price breaks above this previous support. Okay, because then at that stage I'd say, okay, the downtrend is now over, the uptrend is now in place. Now, why do I say that? Well, you got to remember, it takes, if a trend has been in place for a long period of time, we've got to wait for definite confirmations of a reversal before we jump into a trade. Otherwise you can get caught trying to go long against a dominant downtrend. There's no point. By the time price reaches up here, if we look at the weekly chart, that'll be halfway up towards the high of this accumulation or consolidation. If you want to be really conservative, you can wait for price to clear the highs of these highs here before looking for a long, because by that time it will tell us is price has been sold off, made numerous attempts to take out this low, failed, and is on its way back again. So from that moment onwards, then we can look for a long if you want to be more conservative. So really the conservative long would be to look for an entry once price goes above 1.15, 115 on euro dollar, because you're still going to have quite a decent amount of movement back up. Right? How many pips do you need to catch to be profitable? You don't need to have thousands and thousands. You just need to be able to catch a decent amount of pips relative to what you're risking. So if you're risking 50 pips and you're catching 200 pips at a time, that's great. If you're risking 500 pips and you're catching 600 pips, that's not really as effective. All right. So to summarize my position on euro is that I'm looking for a short all the way up until this lower level here. If price breaks below that, I'm looking to stay short. If price breaks above this price point here, that's going to be the earliest place I'd say to look for a long safely, which is around 1.1115. If price breaks above that, that's the earliest place to look for a long. If you want to be more conservative, then I'd say you want to go above this level here. So around 1.15. In fact, I'll put it back down to here. Anywhere above this level, 1.15 will be a good place to look for a long. So that's euro dollar. Let's have a look at pound dollar. And pound dollar here, we can see we've had on a weekly a massive move down, a pull back, and then a decline. And we can see there's a support level here. If I go back to the monthly chart, the thing to note is there's been a huge sell-off. This was during the financial crisis, and since then, what have we really done? We've just been moving sideways. There's a level of resistance here. We could see resistance, support. That's turned into resistance. It's acted to push price further back down, and here's a level of support, a major level of support of the lows here. So since we're here, I think the most likely course of action is for price to get to these lows before looking for potential reversal. Once again, we want price to head down in combination with the dollar turning from the $100 level back down. If the dollar is rejected at the $100 level, like I said before, and turns down, and if euro dollar hits these lows and starts to move up, if pound dollar then hits these lows and starts to reverse back up, then we know we've got dollar weakness starting to come back in, so then we can look for these plays against the US dollar. And if we get these right, you'll get a very good reward to risk ratio, because there's nothing to prevent them from heading back up to these former highs, as long as you can stay in for the long run. That might be a longer term trade, but in the interim there'll be some shorter term trades that will allow you to capture profits along the way up. Let's dive to the daily chart. On a daily chart here, here's the level of resistance here, and this is this level that we identified recently. Okay, the price around, if I was to summarize it, it's around 1.46. Okay, so that's the support level that we're sitting on at the moment. Now we can get a bounce off this to go long. It could happen. However, this was a major turning point here. So the same thing can happen, because history does repeat itself. So if you get a bounce off this on the daily chart, that could be a great trade to take. Or if you're looking to take a very long-term perspective, then it's better to look for the long around this low here. So the way to trade this would literally be, if we get a push above this, then you could look for a long that may last for a few days. The longer term trade where you can get significant profits is going to be if we go below this level here, looking for the short to this level of support and reversal from this level of support back up. All right, so that's euro dollar and pound dollar. A couple of other pairs very briefly. We've got dollar yen, and the thing with dollar yen here is, looking at the monthly, we are at a previous resistance level here. We can see that it was a significant turning point, and it's struggling around that level. So this could start to sell off. It could, prompting us to look for dollar weakness early. However, I would wait to see what the dollar index does before looking at trading opportunities. There's nothing that immediately jumps out from here. We'd have to look at something like the weekly chart and see that actually here you can see we've got consolidation and potential support level around here. So key thing what you could look for here is a break below 116. So if we get a break below 116, then I'd be starting to look for shorts from that moment onwards, because what it's going to tell us is that this upward movement here has come to an end and we're starting to sell off. How far that'll go is difficult to say. It depends how much of weakness we see in the dollar, but there certainly should be a decent amount of movement that follow this level here. So I think this is worth watching, around the 116 level there. The final chart I look at is dollar CAD, and this baby has just been rallying massively. We could see we had a move up, a pull down, and a rally upwards. This is the monthly chart. It's cleared these resistance levels quite comfortably. The next level to test is just the support level above it, which sits around the 1.4464 level. If we fail at that level, then that could, give the first opportunity to sell. What I would do instead would be to wait for price to pull back to this former resistance level here that could act as support for a possible long. The only place where I think is safe to look for a short will be, say, these extreme highs, because it failed to go higher and turn significantly after that. So I'd look for a short of these highs. Until then, I'd look for a long here. If we turn off this level, you could look for a short from here. The only problem is that could be a little bit aggressive. So dollar CAD, I'd say, is pretty strong at the moment. We'd want to see a move certainly below this level before looking for a possible short. But of the pairs that I've discussed, I say there should be sufficient opportunities in euro dollar, pound dollar, and dollar yen, and to the degree that we could put dollar CAD on hold for the time being until we get further clarity. So that's the wrap up for the time being. I'll be back with another video soon. I hope you got some value from that, and happy trading and a happy New Year, as I said once again. From all of us here at Trade Simple, Trade Smart, trade well. And if there's any assistance you need with your trading, whether it's training, mentoring, whether you need some additional inputs, etc., just get in touch. We've got a number of things a number of different products and offerings that a lot of traders have benefited from, and I'm sure you can do so. Until then, happy trading. Bye bye.